If you're into scalping or day trading and often feel you're entering trades too late, getting caught by too many false signals, or giving back profits due to poorly managed pullbacks, then this video could completely transform your trading approach. Today I will show you step by step one of the most used strategies by professional traders, especially early in their careers, but still extremely efficient to this day. It's a simple, visual, and highly replicable strategy, perfect for anyone who wants to trade on lower time frames without cluttering up their chart. So stay with me until the very end, because this specific setup is indeed one of the most consistent for capturing a clear trend continuation. The first thing we need to do is be here on TradingView.com and select any chart we intend to operate on. I'm on the EUR, USD, and Forex, but you can use cryptocurrencies, stocks, indices, whatever you prefer. The time frame I personally use is the 15-minute, but you're free to test out other time frames as well. Alright, the very first thing we're going to need to do here is to put in our indicators. I'm going to remove them and then re-add them with you. Firstly, let's navigate to the indicators section and look up 3MAS. It's going to be this second option here, 3MAS. So the moving averages will show up on our chart. We will then go into their settings and as the very first step, change all of them to white. Next, we'll navigate to the input section and we'll universally set them to 50, specifically 50 and 50. The key distinction here is that for the first one, we'll keep it at close, then for the second, we'll set it to high, and finally for the last one, we'll select low. After that, we can simply click OK. You'll notice that a moving average channel has just formed, and this particular channel will serve as our guide to capture the most opportune trend continuations. Let's go back to the indicators section, and now we're going to search for EMA. Let's select the exponential moving average. We'll click on that one. We're going to navigate to its settings and make the necessary adjustments there. Let's change its color to yellow, and for the inputs, we're going to set it to a 200 period average. You can go ahead and click OK, and just like that, we now have our entire strategy ready to be put into operation. Basically, this trading setup serves as a trend follower. In essence, we're going to anticipate the price executing a breakout, followed by a retest of the average zone before it resumes the prevailing trend. So in this uptrend, what do we want to see? Many ask what platform I use for Forex, stocks, and cryptos. I personally use EXNESS because it offers very fast execution, extremely low and competitive fees, and a simple to use interface. It's the platform that best fits my analysis style and workflow. If you want to check it out, I've left a link here in the... Here's also the description. We want to see the chart working above the 200 period yellow moving average, which indicates that the macro trend is indeed an uptrend. Furthermore, we want to see the price operating significantly above, quite distance from the white moving average zone. From the very moment the price performs a pullback, moving into this specific zone, and then forms a green candle, powerfully breaking out of this zone, a strong assertive candle, much like this particular one here, which is clearly a 15-minute candle, we are then able to precisely place our buy entry right at the exact finalization of this impressive candle. The stop loss should always be placed below the moving average zone, just a little bit underneath it. At that very moment, the final moving average zone was positioned right here. We would then place our stop loss at minus 0.08. The stop loss would have been right at this spot. The price nearly returned to our designated stop loss level, yet it swiftly re-engaged the uptrend. And so, since the stop loss was 0.08, our target should be double that, 0.16. And the chart came to hit it right here just a few minutes later, delivering a really good take profit on the buy entry. And for selling, it's precisely the same situation, just in reverse. We aim to observe the price beginning to operate beneath the yellow moving average, and likewise below the white averages, within that moving average zone. Furthermore, we wish to observe the price move significantly away from this point before it initiates a return. The moment it makes a return and enters the white moving average zone, we will need to observe a red candle that confidently exits this zone, clearly demonstrating significant strength, indicating rejection and a powerful momentum towards a downtrend. So at this specific moment, we would meticulously position our buy entry precisely as this candle concludes. The stop loss is placed a little above the moving average zone, the white moving averages, right, the channel of averages, at 0.10%, and our target is twice that, down at 0.20. The chart came down to get it right here, giving us a take profit, this time on a downtrend trade. This is truly one of the simplest and most powerful strategies you will ever encounter. Follow these rules, mix them with good risk management, and you'll get very good practical results. But remember, this is not an investment recommendation, much less a recommendation to use any indicator. Do your own analysis, and if you're not confident, seek a professional advisor to help you invest. If you like this video, subscribe to the channel and turn on notifications because there will always be new videos and you will be the first to know if you are a subscriber. Also, please comment below to suggest more indicators, so I can provide you with additional easy-to-use setups and indicators, just like these. That's it for today's video. Thanks and see you in the next lesson.